Hello and welcome to this DigiFest session looking at central bank digital currencies. My name is Joe McGrath, consulting editor of Open Banking Expo magazine, and today I'm thrilled we've been joined by three highly respected individuals. First, we have Carolina Caballero, Head of Innovation, B2B Payments and Digital Currencies at MasterCard. Second, we have Chris Arulia, Vice President of Banking Relations at Bitstamp, and also Nelixa Devlukia, the founder of Payments Solved. Welcome to you all. Central bank digital currencies have had a considerable impact on the financial services industry in terms of innovation. I'd like to start by asking you, Chris, for some insight about how central bank digital currencies are changing the financial services landscape as we know it. Chris.
Thanks, Joe. It's a really good question. I mean, I think obviously we're at the start of a revolution in money, I guess. And you know what? I guess the first place where this is starting is changing the conversation around money. Obviously, you know, I come from the crypto world, and you know, Bitstamp's been in the market since 2011, and the advances in that world have arguably spurred what we're looking at now with the conversations around CBDCs, central bank digital currencies. So the first part is, I guess, looking at, you know, what forms of money will we have in the future, and obviously the publications and the works and the projects that are going on amongst the central banks are looking at that and saying, can we as a central bank introduce a digital form of money which sits alongside cash? And then, you know, the second part of that is, you know, what's the impact to the financial system? And then within all of that, it's what are the technologies we're going to run that on? So if we look at, for example, what the Chinese are doing, out of all of the central banks, they're obviously ahead, let's say, in actually introducing something, and the pilot project in Shenzhen. And, you know, what the Chinese are doing is basing it on, you know, non-blockchain based technology. If we look at what the Bank of England's looking at, you know, there's still an open discussion around, you know, what will the technology be? So I think, you know, the starting point for this is really the whole conversation, opening up the whole conversation about what is money going to look like in the future, most certainly pinned around a digital form of that money. And then, you know, how is that system going to work in the future? And so I think we're at the start of the whole journey, Joe. Yeah, a really good start point here to talk about, you know, what we think that's going to look like.
Nelixa, can I just come to you? I'd be interested in getting your thoughts on this. Do you agree with that sort of sentiment that we're start of a revolution? It sounds like quite a powerful term to describe, which is something that is admittedly innovative, but would you call it a revolution?
I would say it's more for me an evolution rather than a revolution. If you think central banks have been looking at the different issues surrounding digital currency and central bank digital currency in particular for a number of years now. The charge was, I think, really led by the Riksbank in Sweden, who decided that they needed to look at what was their role within financial services and their role as a central bank, given that there was this substantial decline in the use of cash within Sweden. And then the discussion has sort of moved around the globe. And as Chris highlighted, there's already a pilot of CBDC out in China. There's also another pilot being undertaken, very different location, jurisdiction within the Bahamas. There's discussion papers put out by the Bank of England. There's a current paper that's discussing the digital euro published by the ECB. And I think that the drivers for these central banks are sometimes a little bit different as to why they might want or need a digital currency. If you think Sweden was interested about exploring the value of digital currency as against a decline in the use of cash, other jurisdictions are probably looking at it because of a means to financial exclusion, or whether that's a different or better way of achieving financial inclusion. China is looking at it because obviously it wants to balance the power of the fintechs within the payments economy there. Europe has raised a number of reasons as to why it should consider issuing a digital currency. But I think it's important to actually highlight that most of these are either pilots or considerations as to whether a central bank would issue a digital currency, except for maybe the example of China, which has very particular drivers. I don't think we're in a position yet, and I sort of should add, and the Bank of the Bahamas that has rolled out its digital currency across its various islands, I think most jurisdictions are still in the thinking phase, thinking about, do they need it? What does it achieve if they issue it? And what are the checks and balances that are needed also if they issue it? And how useful will it be to consumers? Because if you live in a fairly advanced payments economy, then what does digital currency bring if you already have faster payments, different payment mechanisms, different payment methods? It gives choice, but does it give you much more than that?
Yeah, I think most of us would agree that the jurisdictions around the world are certainly in thinking phase. If we sort of look at the reaction or the work that's going on in corporates, though, it seems that there is a lot of anticipation. And Carolina, if I may come to you at this point, can you offer some insight as to what MasterCard have been doing with your current testing platform?
Perfect. Yes. Well, so MasterCard has announced a CBDC testing platform a few months ago with a view to engaging with central banks and taking the opportunity to discuss what, one of the points Nelixa just made in terms of taking an approach in terms of the impact to the consumer, to the users of this currency, bringing in those views to the central banks. And so by engaging with central banks and enabling them to test on our platform use cases in a controlled environment, we are able to ascertain the value of the introduction of a CBDC in a market. So what we've created essentially is a testing platform that enables the setup of different use cases, all the way from the issuance of the currency down to distribution and exchange of transactions in a controlled way. We can change the technology stack, we can change the use case and the application of a specific payment, and we can change the different governance models on it as well. So this enables a lot of flexibility and basically taking to central banks our point of view of what would be the impact of an introduction of a new monetary instrument in the system, understanding that there is other payment rails today that are working and that have governance models, standards that enable the exchange of money in a secure way. And so how do we contemplate the issuance of a new monetary instrument onto the others that exist today? Can these be exchanged onto the existing rails? So that's the point that MasterCard is trying to bring back.
Sorry, I think there was a delay on my part. I was going to say, Carolina, can you tell me whether the central banks broadly that you deal with are very open to hearing about what the future may hold? Are they sort of willing to collaborate about ideas which they can't practically necessarily comprehend right now?
Yes, they're very willing, and they're very willing to hear what we have to say. I think we have an expertise in terms of card rails and real-time payment rails, and as well as the customer's view, because we operate in that space. We're subject matter experts, and so if you think of the central bank, thinking of the monetary policy and the impact of monetary policy with the launch of a CBDC, we are taking an approach more on the bottom end of our picture. What is the impact to the consumer? So they're very open to hearing from us because they don't necessarily have that view.
And I'm just here because I don't necessarily just be focusing on the positive that's in each way, the positives which may occur at some point in the future. So I'm going to throw a question to you, Nilixa. I apologise in advance. Obviously, with with all sort of disruption and innovation, there are risks. Can I ask you to explore what some of these risks may be and what are the challenges that the industry faces to make sure that we're aware of those risks and that we can overcome them?
Sure. I think when we talk about CBDC, there's a number of sort of macro risks. These are the sort of the monetary policy tool risks that a central bank and a government will be looking at. Will it give them new and additional levers? When there's discussion about CBDC, there's often talk about the fact that they might be able to, it might be an easier way of leveraging negative interest rates. There is also discussion, though, about risks. So, sorry, those are the sort of macro risks. You've then got the risks that occur within the sort of industry that also impact those risks. So central banks are also concerned about deposit substitution, in that central bank digital currency is, state-backed currency. And so therefore, it's actually, for want of a better word, better than commercial bank money. And if you have CBDC that functions as account-based CBDC, then actually you have something as a consumer that you can hold that is, as it stands, better than your deposits in a bank account, because they're 100% guaranteed by a central bank, as opposed to in the UK, you get your first £85,000 because of deposit guarantee schemes. And those are the sort of challenges that central banks are grappling with, because obviously they don't want to disintermediate the commercial banks and the banking industry, because that has lots of knock-on effects to leveraging the bank's ability to lend money. You wouldn't necessarily have to see a physical bank run as queues outside of a bank, because people could just switch from deposits to CBDC if they had concerns about their ability to get their money back. I think, though, that the central bank's looking at ways and means to how to manage that. Whether that is a real risk or a hypothetical risk, I think, is debated by some people in the market. I think from a consumer use perspective, there are probably issues around protections, in that today when we pay, we have various different protections for when we send and receive money. In Europe, that's primarily under payment services legislation. Now, the expectation, I think, is that if you have CBDC, that would benefit from the same protections, because you're sending and receiving it electronically. But actually, is that the correct outcome? Maybe it should be more like cash. Maybe you don't have those protections, even though you're using it electronically. And I'm not giving you what is, I think, the preferred position here. These are all the sorts of risks that have to be considered by a central bank if it decides to issue, along with considerations of, should they issue it directly to a consumer? Probably not. I don't think any central bank, is looking to have a consumer-facing relationship. So they'll probably issue CBDC on what is generally termed like two-tier CBDC. So they will issue it to the commercial banks, and the commercial banks have the consumer-facing relationship. But then there's the question of, should it be account-based CBDC or should it be a token-based CBDC? Because token-based would primarily, I think, act more like the cash that we have today. It could be used more in an offline environment. So, if you don't have connectivity, because remember, that's a technology issue as well. In order for CBDC to function, you have to have connectivity. If you have account-based CBDC and you want to monitor and manage the flow of that money to know that it's been spent. But you could have token-based CBDC, which maybe functions better in an offline environment if you don't have that connectivity. You could have thresholds that could allow you to make small value payments without that connectivity. So there's lots and lots of points that have to be considered by central banks as they think about, do they issue, how do they issue, and what parameters and protections are in place. And I go back to the point, will it give them something more or better than what they have today, compared to maybe just improving or upgrading the existing payment systems that are there? Because if you think CBDC primarily is going to give you instant payments. Now, a lot of jurisdictions have instant payments, but for those that don't, it may be easier for them and maybe even more cost effective for them. Because remember, there's a huge infrastructure cost associated with a bank actually deciding it's going to issue a CBDC. It might be sort of, the cost benefit analysis might be that actually we should upgrade what we've got rather than issue CBDC. And this will be different for the different jurisdictions across the world.
I just want to bring Chris in at this point as well. And Chris, if I may ask you, obviously we're looking at this very much from the thinking that's happening on the risk side with what central banks are feeding in. We're talking about the issues about protections, for instance, but also sort of relating to that, we have to anticipate what change needs to come about from a regulatory standpoint. Is there anything which you think is a sort of noteworthy change, or there are noteworthy discussions at the moment which you think people that are with us today should be mindful of when looking at this market?
From a regulatory perspective, you mean, Joe?
Yes, specifically looking at regulation.
Yeah, well, I think both Nelixa and Carolina raised some good points around use case here. So, ultimately, what is the consumer use case? And then what additional regulation do we need to put in place around those use cases? And I think that's probably the area that, amongst, and I think Nelixa summed up very well, the risks and the issues that face central banks in looking at this. And I think, when we look at the use cases and say, well, how would a central bank envisage consumers using a CBDC, and in what kind of scenarios would it be used? We would then have to look at the regulations, say, does additional payment services regulation need to come in, to cover consumers in this event? So I think there's still a lot of discussion and thinking to be done around that. If we just take the simple view that says a CBDC is another form of cash, so it's a digital form of cash, but then you could argue that we have sufficient, regulation already in place. Maybe there's additional things that need to happen in terms of existing regulations, take account of this new form of money. I think, Joe, it comes back to, what are the new use cases? If I may sort of pick up on that, if we look at the way that this could be implemented, there is a view that says that we could enter a world of programmable money. So if you start to have a form of money that has dependencies based on systems, and those systems, controlled by events, do we then need to have, additional regulation that says that, a consumer is protected as part of a transaction that is dependent on this new form of programmability, where there are inputs and outputs from various places. And so I think, we then enter a new realm, and potentially there that regulation needs to come in to protect the consumer.
I think, Joe, can I just add?
Sorry, go on.
Sorry. I'm hoping all this can be edited and made look very smooth. I just want to, I think Chris made a really good point about programmable money, because that actually raises the discussion about CBDC and privacy. Because obviously if you have programmable money, you have more data that flows. Now, obviously, in payments, there's lots of regulation to cover, anti-fraud measures, AML measures, sanctions, that requires a certain amount of data to flow with the payment to mitigate all those risks. But actually, programmable money could have lots more data that's attached to it. And then you have the question of actually how much of that data should flow and who should it be visible to. at any point in the given transaction. And so, central banks themselves are grappling with the concept of, how does CBDC, balance with privacy? Because obviously when they issue cash doesn't come with those same privacy concerns.
No, understood. Carolina, I'd like to bring you in at this point. Is the privacy issue something which gets discussed a lot at MasterCard?
Yes, it is. And as Nelix is mentioning, I think central banks today have different views. The way, I will mention a few years ago at MasterCard, we decided to invest in our own blockchain protocol with a view to understand the technology and to explore and utilize it for different use cases. One of the points that we had very clear for us as we service the financial services industry is to consider what information is enabled or available to the different participants that operate in that consensus environment. And so the way we've designed the protocol at that time was with a view of protecting the participants of a specific transaction so that the information wouldn't go beyond those two participants, the sender and receiver, for example, and not be communicated to any other party unless it was deemed necessary by some higher level authority. But it is something that we are discussing. We're not set on any specific mechanism at this point, but we are considering what that implies. And so are central banks. And whenever we have discussions with central banks, this is an issue that comes up. It comes up in consultation papers. So this is something that I think people are still getting their minds around.
And would you say that as a business, you're already preparing for a future where there is programmable money?
Correct. We are working on specific use cases that include programmable money. In fact, we see that one of the benefits of the CBDC is the aspect of programmability. Whether it's installment payments, micropayments, those type of conditionality payments, we see value in the programmability capability of CBDCs and digital currencies in so use cases, not alone with CBDCs, but other use cases as well.
I think we could probably have a seminar of a good hour on that theme on its own, but I'm conscious of the time, so I'm going to move it along. I'll leave it to the Q&A to come back to any of these themes that they think are particularly interesting. The mighty elephant in the room has to be the whole COVID-19 pandemic. I think most of the people that I've been speaking to today have told me about how it's affected innovation and the implication that's had on development. Would you say that that's the same for CBDC, Nelixa? If I can come to you first of all, do you think that it's noteworthy that we've seen an impact?
I think, it's a good question. I don't actually think that COVID has impacted the development of CBDC. I think that what COVID has done is highlighted that the building blocks that you would need to have a central bank digital currency are not necessarily there as we might have expected. And I go to the main issue there, which I think is a digital identity. I think that what COVID has highlighted is that, and particularly when we've talked about, distribution of funds to people and businesses, the one, I think, barrier often, particularly to individuals, when that distribution has been done electronically, is to make sure that the money is going to who you think it's going to and intend for it to go to. And in order to do that, you need to have a robust digital identity framework. And if you're going to have digital central bank money, then again, you're going to have a robust identity framework for individuals and businesses who want to send money between themselves. And I think that maybe that's what's particularly come out of the COVID crisis for a variety of reasons, setting aside all the other challenges that everybody has faced. There was, I think, it was in the US, where at one point when they were talking about their distribution of funds, there was a debate about let's do it via CBDC. Now, they didn't, and it's probably good that they didn't, because would have been the biggest pilot, wouldn't it, of CBDC ever, with no real sort of structure around it. But what they did do was then send out checks. So, it was sort of, I think, just an enlightening situation that the conversation was, let's do it by CBDC, but actually, no, we can't, we won't, whatever that landed. And the solution was to do it by checks, which to me was like total ends of the spectrum of how this could be done. But fundamentally, however you're going to do it, you need to know that the money is being transacted between the people who it is intended to be transacted between or sent to, or, the business you're paying. And particularly when you think all of this is going to be instant, then I think that the fundamental here is the need for better digital identity frameworks.
Carolina, you were nodding throughout nearly all of that.
Yeah, I could not agree more with Nelixa on this point. And, I will say that MasterCard, throughout this COVID crisis, overall as a company, we've seen a huge increment in digital payments overall. I'm based here in the US, and what Nelixa is talking about, specifically about COVID aid from the government directly to individuals, was a big deal a few months ago, and could be again if there's a new package being sent out. Where absolutely MasterCard agrees that that was not the right time to test CBDCs. But I would say that in a situation like the one we are experiencing, the idea of a CBDC is an interesting alternative, given the ability to reach individuals perhaps that may not necessarily be banked or have the same benefits of banking and payments that some of us do. And who may be displaced from their place of where they live generally, because that's what happened with the COVID crisis. Many people were found to be in different locations and had to stay. And so if they needed to have access to money, it was cumbersome, to say the least. But I do agree that that one of the aspects that still needs to be solved is the identity management. And that is something that, I think countries and jurisdictions are approaching this differently. And I think, one of the considerations for CBDCs to continue progressing has to be the consideration of digital identity.
I think it's interesting that we've just discussed the wild swing from CBDC to, almost the past, talking about sort of check issuance there. I just sort of, if I may, before we finish up and throw it open to the Q&A, I just want you all to dust off your crystal balls for a second. Chris, I'm going to come to you first. If I could ask you for one theme which you think this market might have in store for us in the future, or one aspiration perhaps, what do you think it would be?
I think for me, it would be going back to programmable money. For me, the appeal of CBDCs and digital money is, can we move beyond, the way that we use money currently to a way that gives us far more power and flexibility, shall we say, in a way that we haven't today. For example, if I shop from Amazon and I pay, can that payment be tied to the goods being delivered or the goods arriving in a certain quality? And I, the money only leaves my account when I'm happy with that transaction, rather than the process we have at the moment where, I receive some goods, I open the box and lo and behold, it isn't what I expected, or, it doesn't work the way I need it to. So I think there's all sorts of use cases. I hate to come back to the use cases, thing, but I think there are, a whole load of new use cases that come out of the programmable aspect of money, which for me are quite exciting.
And I'll ask the same question to you, Carolina. What do you think the future has in store for us?
So I would agree. I think programmability of payments is key here. It's the differentiating it's one of the differentiating factors. I will also say that for me, the introduction of a new monetary instrument such as a CBDC, it needs to be flexible in a way that enables initiation and termination of a transaction in different formats. And so a transaction may be initiated in CBDC denominated currency, and it can terminate on the other end in bank money. And that should be indistinct, right? So there shouldn't be any differences on that. This is where we believe that CBDC should be going, not to remain in a siloed scheme, but to be interchangeable onto other existing schemes, to add alternatives as opposed to creating a siloed rail, to add optionality for consumers and to mix and match, right? So initiate one place, terminate in another place, different payment mechanisms. That's the future of payments.
Nixa, do you want to agree with those or add one of your own? What's your fusion?
Oh, well, absolutely. I definitely agree. And I think I can add that absolutely the future is all about choice, consumer choice, appropriate consumer protection. But I also think that the future that where we see a CBDC, we'll also see a Libra. Because you've got to bear in mind that some of this interest in CBDC is a direct result of the launch of the first Libra white paper, and that has galvanized, I think, central banks into just considering what is their role in money, given that an entity like Facebook could issue private money. We're a state where it's stalled a little bit and is going through a bit of a rethink, but just the fact that it was public and it's doable, I think, has made central banks reassess what they need to do and how they need to do it and what is their role going forward. And I definitely see a world in the future where there will be both.
Folks, thank you so much. As always, your ideas are very much appreciated. So thank you for joining us. But before we go, we do have some time allocated for a Q&A session. So without further ado, I'd like to throw it open to those who are watching this webinar today. Welcome back to the interactive element of this webinar. I'm pleased to say that the panelists are still with us, and from that rather gripping conversation that we had, I've gone away and done a bit more research. You couldn't join us at a more timely moment. You'll see that Reuters about half an hour ago put out an update on the price of Bitcoin and the rally coming to a bit of a break. But also in doing my research for that, I stumbled across a Financial Times headline from a few months ago, which was related to something we discussed on Libra. I'm going to throw this to Carolina to begin with. The FT headline said that Libra was once a world changer and it is now just another PayPal. What are your thoughts on that?
It's definitely an interesting analogy. I would say that Libra started off with a bigger plan, and they were evaluating the idea of creating a coin that was based in a basket of currencies, and so that would have dramatically changed the way that the treasury part and the FX part is conducted today, essentially creating a new currency based off of reserve currencies. That would have been a very interesting plan. I think there are challenges to implementing something like that from many aspects, and so now the idea is that they're going with the existing currencies in a digital form. I would not say necessarily that it's a PayPal, solution equivalent, but I would say Facebook does still have a captive audience and a segment of people and users, and that operate in a very different way, in an innovative way. And I think that is where the innovation, in my mind, would be coming from. The idea that that market that operates social networks now is able to utilize their social networks to move money. So I think there's still benefits in that space, and there's definitely innovation, but it is coming from the earlier or original idea. So yeah.
Yeah, Chris, if I can just bring you in off the back of that. Obviously, Libra was something of a catalyst. It made everyone sort of react and suddenly realize that they have to do something. What lessons would you say central banks specifically have learned from what Libra were trying to do at the start to where we are now? And do you think that sort of, even though they may not have achieved their original aims, do you think that sort of changed the landscape forever and for the future?
Yeah, I would say yes. It's definitely changed the landscape, Joe. I mean, to pick up on sort of Carolina's point, Facebook and Libra led the way and sparked the conversation. Obviously, PayPal is the current news, but essentially what we're talking about here is different networks. And then if we break that down, PayPal is a payment network, as are Visa and MasterCard, and the bank networks. And so there's somewhat of a, just sort of, if I can just go back a little bit on the Libra question, is that there's a bit more work, obviously, for Facebook and Libra to do to turn a social media network into a payment network. Now, in terms of central banks, what they're looking at is, what change do we need to make to banking networks that provide benefit to those people using those networks? And if one of the things that I think with the innovation around Facebook and Libra and PayPal, and obviously in the Bitcoin market, consumers are using these new forms of digital money. And so from a central bank perspective, they're in a position where they can look at, some of the lessons here. And definitely there are a number of lessons from the Libra project, where even themselves, they've updated the white paper with some new elements to their project. And central banks are definitely learning from that. They're also learning, if you look at the different elements of central bank thinking around the world, they're all looking at things like security. They're looking at the protocols they're going to use. They're looking at, is this going to be on the blockchain, not on the blockchain? So, yeah, definitely, a number of things feeding into their thinking. And obviously that will inform, eventual solutions that they come out with. For me, it's about the network, and it's about what's going to travel over that network, and every player is going to have a different take on it.
Nelixa, can I just come to you and bring you in off the back of Chris's points, because I guess one of the great things about the commercial world is that they have all of this money to promote the innovation that they've invested in. I guess often there are great things being done by central banks and by policymakers and by regulators, and they can be overlooked. So in your opinion, what do you think needs to happen to draw attention to the importance of CBDCs for the future and the significance of how transformative they might be?
I think that that's quite a complex question, isn't it? I think there's actually quite a lot happening for those who are interested in CBDC. There's a lot of publications out of there. There's central bank pilots. There's conferences like this one that talk about CBDC. I think if I sort of drill down, maybe you're thinking more about, in the wider population. And,
Absolutely.
I suppose I have a question mark as to, well, except for sort of interest, is that really necessary at this point in time? if you take the analogy of open banking and how difficult it's been to get interest in open banking, and this is even a little bit more weird, isn't it? So I'm not sure that there's any real consumer interest in it, and I don't think there actually needs to be. I mean, the whole point about all of these financial services products like open banking and CBDC is that they'll be used if they're useful, if they, give value add, and there is consumer trust in them. And I would say that CBDC is probably at a really good starting point on that, because it's issued by a central bank. So why would there not be consumer trust in the product? So raising awareness of CBDC, I think, is going to be more about, the functionality, the types of products, the usefulness that comes from transacting in CBDC as opposed to any other form of payment. But it will be, I think, also a matter of choice. The benefit of something like CBDC or Libra is that it brings more consumer choice. You decide as a consumer how you want to transact and in which medium.
I think that's really interesting, and I do agree that right now there is a sort of certain level of discussion happening in certain circles like this, and of course there should be, because we're the industry. However, there comes a time where that education job does need to go out to a broader circle, I believe, in order to bring up levels of trust. I mean, you look at what's happening with COVID and the vaccines, for instance. There needs to be an education job on the science behind it and why that will lead to a growth in trust. Apologies if that's a poor analogy in your view, but Nilitsu, if I may come back. Do you think that there will come a point where we recognise, okay, now is the time to expand that education more broadly?
So I go back to, education is such a broad thing in financial services, and it's very, very difficult, as anybody who works in industry knows. Consumer education for financial services is difficult. So I think it depends on what we're actually looking to achieve. If you look at the adoption of financial services products, I mean, PayPal's an example. You look at adoption of say, WeChat Pay and, services like that. I'm not sure that they've been adopted because of education. They're being adopted because of use and a particular moment. I mean, another example is contactless. The generally held view is that contactless took off because it was adopted by Transport for London. So it provided an ease of consumer experience that wasn't there before. The point about CBDC and trust is going to be that it has protections. Now, whether they should be the same as payment protections that exist today or whether they should be different, I think is a discussion still to be had. But that's what's going to drive adoption, that and usability. If you can't actually use the product, it's no good, is it? That's the other point about, now people have contactless. And I know when contactless first came out, I live in a fairly rural area. So in London, you could use contactless, but not in Norfolk. But over time, that has evolved, and everywhere you can now use contactless. And so it's having that network of acceptance that's going to drive it. And again, I come back, I always have a question mark over consumer education. Consumers should understand financial services. They should understand the products that they're buying and interacting with. But actually, the fundamental should be that they are safe and secure and that there are appropriate protections for the product that's being sold.
Yeah, it's definitely I think that's a point that's been made by many in the investment industry as well, particularly with some of the more sophisticated products which are available in the market. Which brings me to you, Carolina. Do you believe there is any sort of commercial benefit to spending on education from MasterCard's perspective, specifically with something like CBDC?
I wouldn't necessarily call it a commercial benefit, but I would say that MasterCard is interested in providing the consumer view. We are experts in that sense, right? We run networks, we create solutions. We're connected to the market. We are connected to the payments market. Our clients are very diverse, and so all of that knowledge, I think, is very useful to central banks. And that's what we found in our discussions with central banks. While they may be considering the CBDC issuance and minting distribution piece, they're not necessarily, they don't have an insight into what's happening with the consumer. So by providing that insight, what MasterCard and other companies in the payments world gain is that those new networks that are being created and the infrastructure will be modeled after what is really useful, what is addresses customer needs. And again, I go back to Nelixa's point on addressing customer needs and pain points. If you create something that is not going to be used, it doesn't address a pain point, it's just going to stay there. There's not going to be any adoption, right? So that's why we are interested in that investment of I wouldn't say necessarily education, but it's providing our point of view on what we believe is important to maintain and the creation of new payment networks.
That's great. Guys, I would love to continue this discussion for a lot longer. It's been, without doubt, the most fascinating webinar that I've worked on, and hopefully we get to speak about this again before too long. I'm sorry we haven't got longer, but I'm going to have to leave it there. Thank you so much.
Thank you.
Thanks,
Thank
Joe.
you.